It is the afternoon of Tuesday, January 27th, 2026. While Canadians are distracted by the collapsing dollar and the soaring price of groceries we discussed this morning, a fleet of private jets has touched down at Pearson International Airport in Toronto and YVR in Vancouver. These jets do not belong to tourists. They do not belong to tech moguls looking for a vacation home. They belong to the executives of the world's largest private equity firms, Blackstone, Invitation Homes, and a dozen other Wall Street giants whose names you might not know, but whose power you are about to feel. They are here for one reason. The Great Canadian Fire Sale has officially begun. While you are struggling to pay your mortgage, struggling to hold on to your family home, these firms are preparing to buy 10,000 homes in a single transaction. They are not buying them to live in. They are buying them to rent them back to you forever. The conspiracy theory you laughed about 5 years ago, you will own nothing and you will be happy, is no longer a theory. It is a business plan. And today, thanks to the crashing loonie and the foreclosure crisis, Canada has become the most profitable hunting ground on earth for corporate landlords. To understand the magnitude of what is happening, we have to look past the individual for sale signs on your street. When we talk about a housing crash, most people imagine individual families selling to other individual families at a lower price. That is the retail market. That market is dead. The real action is happening in the wholesale market. Right now, the big five Canadian banks are sitting on billions of dollars of toxic assets. These are the mortgages that have defaulted, the power of sale properties that aren't selling, the pre-construction condos where the buyers walked away. The banks need to get these liabilities off their books before the quarter ends, or they risk insolvency. They cannot sell 10,000 homes one by one on MLS. It would take years and crash the prices to zero, so they call Wall Street. They package these thousands of homes into a bulk portfolio, a spreadsheet containing addresses, square footage, and debt. They sell the entire spreadsheet to a US hedge fund for 60 cents on the dollar. The bank takes a loss, but they get immediate cash, in US dollars, to save their balance sheet. The hedge fund gets 10,000 homes for a fraction of their replacement cost. And you get a new landlord. One that is based in New York, managed by an algorithm, and cares absolutely nothing about your community. Why is this happening now? Why January 2026? Because of the currency discount we exposed this morning. With the Canadian dollar trading at 62 cents US, Canadian real estate is effectively on a buy one, get one free sale for American capital. A home that costs 1 million Canadian dollars is only 620,000 US dollars. If a US firm negotiates a bulk discount on top of that, they might be picking up Canadian houses for 400,000 US dollars a door. That is significantly cheaper than building new homes. It is significantly cheaper than buying homes in New York or San Francisco. And yet the rental income from these homes is still high because Canada has a massive population of immigrants and renters who need a place to live. It is the perfect arbitrage. Low entry price, borrower price, a high rental yield, and a captive market. To a Wall Street algorithm, Canada is not a country. It is a high-yield extraction zone. This is exactly what happened in the United States after the 2008 financial crisis. Back then, millions of Americans lost their homes to foreclosure. Who bought them? Institutional investors. They swept into cities like Phoenix, Atlanta, and Las Vegas, bought entire neighborhoods, and turned them into rentals. Today, companies like Invitation Homes own 80,000 single-family homes in the US. They are the largest landlords in history. Now, that model is being exported to Canada. We are with the they would have to mark down the value of their assets to zero. They would fail. The government knows this. So, they are quietly rolling out the red carpet for foreign capital. They are waiving the foreign buyer ban for commercial entities. Have you noticed the fine print? The ban applies to individuals. It does not apply to a corporation purchasing mixed-use or commercial residential portfolios for the purpose of providing rental stock. That is the loophole. It's a loophole big enough to fly a Boeing 747 filled with cash through. The government frames it as increasing the supply of rental housing. They say, look, these companies are professional landlords. They will provide stability. Stability? Yes, the stability of a boot stamping on a human face forever. This shift marks the end of the Canadian middle class as we know it. For 70 years, the primary way a Canadian family built wealth was by owning a home. You bought a house, paid it off over 25 years, and retired on the equity. That equity paid for your long-term care, or it helped your children buy their own homes. That wealth ladder has been kicked away. If Wall Street owns the homes, Wall Street keeps the equity. You pay rent for 50 years, and at the end you have nothing. The wealth transfer is absolute. It flows from the Canadian worker through the rent check across the border into the pockets of U.S. shareholders. We are reverting to a feudal system. A neo-feudalism where a small class of global asset owners holds the title to the land and the rest of us are serfs paying for the privilege of existing on it. And do not think this is limited to condos in downtown Toronto. The target now is single-family rentals, SFR. The US firms know that millennials and Gen Z are starting families. They need backyards, they need space, but they can't afford to buy. So the firms are buying up the suburbs. They are buying the townhouses in Mississauga, the detached homes in Surrey, the duplexes in Calgary. They are targeting the exact starter homes that first-time buyers are trying to get. Imagine bidding on a house against a $100 billion fund. You can't win. They make all cash offers with no conditions. They close in 10 days. They drive the price up just enough to price you out, but low enough to make a profit. They are crowding out the individual buyer permanently. This acquisition spree also changes the political landscape of our cities. When a US firm owns 20% of a neighborhood, they have immense political power. They lobby city councils to block new construction, to keep supply low and rents high. They lobby against rent control. They lobby for tax breaks. They become the super constituents that politicians listen to. Your local residents association has no chance against a team of lobbyists from New York. We are losing our sovereignty not just over our economy, but over our own backyards. We must also talk about the financialization of eviction. These firms view eviction not as a legal process, but as a turnover event. They have calculated the churn rate. They know that they can raise the rent more when a new tenant moves in. So, in many cases, they want you to leave. They will make your life miserable. They will neglect repairs. They will enforce minor rule violations. They want to churn the unit, paint the walls white, call it renovated, and list it for 30% more. The rent strike we discussed earlier, Wall Street is ready for that. They have legal teams on retainer who do nothing but process evictions. They can outweight and outspend any tenant group. They are the terminator of landlords. They do not feel pity or remorse or fear, and they absolutely will not stop until you are evicted. The tragic irony is that the money they are using to buy your house might actually be your money. Many of these private equity funds raise capital from pension funds. The Canada Pension Plan, CPP, the Ontario Teachers Pension Plan, they invest in these US funds because they need high returns to pay retirees. So, your pension contributions are being sent to Wall Street, which uses them to buy the house you wanted to buy, and then rents it back to you at a profit. You are financing your own disenfranchisement. It is a circular firing squad of capital. So what is the endgame? A society divided strictly into two classes, the rentier class and the renter class. The middle class, the owner-occupier, becomes a historical anomaly, a brief experiment in the 20th century that failed. In this new world, you subscribe to everything. You subscribe to your housing, you lease your car, you pay monthly for your entertainment, you own no assets, you have no balance sheet, you are purely a cash flow generator for someone else's asset. This is the subscription economy taken to its logical, horrifying conclusion. This is why the media is suddenly full of articles with titles like "Why Renting is Better Than Owning" or "The Freedom of Not Being Tied Down to a Mortgage." This is propaganda. They are manufacturing consent for your dispossession. They are trying to convince you that losing your ability to build wealth is actually a lifestyle choice. Do not fall for it. Ownership is freedom. Renting from a mega corporation is servitude. If you are a homeowner right now and you are struggling, you are the target. You will start receiving letters in the mail. Not handwritten notes from a young couple, but corporate letterhead offering a quick cash sale. We buy homes in any condition. Close in 7 days. These are the aggregators. They are the scouts for the big funds. They buy your house cheap, bundle it, and flip it to Blackstone. My advice? Do not sell to them unless you have absolutely no other choice. If you sell to a corporation, that house is gone from the market forever. It will never be sold again. It enters the black hole of the rental portfolio. Sell to a family if you can. Sell to a human. It is the last act of resistance you can perform. For the investors watching this, the game has changed. You are no longer competing with other small investors. You are competing with whales. If you are looking for deals, you need to be faster and smarter. But be careful. If the big funds are buying, it means they see value, but it also means they control the market. If they decide to dump inventory in 5 years, they can crash the market again. You are swimming with sharks. And for the renters, brace yourselves. The mom and pop landlord might have been annoying, but at least they were human. The corporate landlord is a machine. Expect higher rents, expect more fees, expect pet rent, amenity fees, elevator fees. They will monetize every inch of your existence. This is the reality of Canada in 2026. We sold our resources, we sold our industry, and now we are selling the roof over our heads. The sign on the border shouldn't say "Welcome to Canada." It should say "Under new management." The private jets will leave tonight. The executives will go back to New York to celebrate their new acquisitions with champagne that costs more than your monthly rent. They are betting against you. They are betting that Canada will fail, and in failing will become a profitable colony for their capital. Are we going to prove them right, or are we going to wake up and demand that housing remains a home, not a stock ticker? Subscribe to Canada Property Watch. We are tracking the bulk sales. We are tracking the foreign buyers. We are the resistance against the narrative that you will own nothing. Stay angry, stay informed, and hold the line.